This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
जी हाँ, आप अपनी स्क्रीन पे देख सकते हैं कि हम लैंडर मॉड्यूल
Well, I think scenes of jubilation, and why not? It's a very proud moment for India. It's a proud moment for the scientists at ISRO. It's a proud moment for citizens like you and me. I think that super conveys it very well. India's moonshot now a reality. So absolutely fantastic news coming out yesterday evening. And I think that's going to be something we will celebrate all day today. Morning, guys.
Hi, good morning. What a moment, right? What a proud moment. Of course, India is now the fourth country to land on the moon. So that, you enter that elite club. But I have to tell you guys about my experience. I was on flight back from Bangalore yesterday and when the Chandrayaan 3 landed on the moon. And when the pilot announced it, everyone just erupted in, in applause and cheer on flight. It was a great moment really to celebrate. I'm sure all of you watched it with your families as well. But spectacular, right?
Absolutely, and the first on the South Pole, right?
Yes.
So fourth overall and first on the South Pole.
That's where the water is, Nigel. I'm not kidding. The ice in the water is... I'll tell you, I was at this CNBC TV 18, the mega banking conclave yesterday, and there was a panel discussion going on, and I think there was the floor was open to questions, and a gentleman picked up the mic, and we all thought, well, he's going to ask a question. He said, well, I don't have any question, but I want to just announce that Chandrayaan is landing on the moon. So, I mean, the entire room erupted. And actually, that's the thing, right? I mean, it's the experience of experiencing something like this with other people, which adds to it.
I don't think you understand the enormity of the situation until maybe a few years later when you can actually go back and think, that was the day when Chandrayaan 3 landed and I was there to witness it.
And across ages, people were celebrating. Whether you look at your parents or you look at your children as well, they came home from school saying, today it's something special on the moon. So it was such a special moment. You just got home and everyone is excited about it. So,
it's a happy occasion.
And proud.
Proud, absolutely. Well,
this was unmanned, but hopefully someday maybe you'll take a trip to the moon.
Yeah, I mean, I think there's a mission called Artemis 3, which NASA is, they're planning to send people back to the moon, and that's scheduled for 2025. So our own, I don't know, but it's a start. Not too far away. All right, well, let's just quickly kickstart the session with what you need to know in terms of the action, right? Markets, by the way, are also looking good, I dare say, after many sessions of kind of sideways and lackluster moves. So it'll come up on your screen. The Nifty yesterday ended higher. And the question is it time to now pick up the pace? Is it time for the market to break out of this kind of consolidatory zone? And is it time for the market to pick up pace on the upside? That's the question. And why am I saying that? I'll get to technicals and levels in just a bit, but overnight we have a solid rally. So you have the S&P 500, which was up 1.1%. The NASDAQ was up about 1.6%. So this is, way better than the kind of closes we've been having in the US session for the last many. The Treasury market gave a very big move. The 10-year yield lost 14 basis points in a single session, right? We had hit 4.35. We are now back to just under 4.2. And the reason is that you had weak US data, which basically triggered a dovish response. I'm talking about US manufacturing PMI, services PMI maybe lesser so, the BLS employment survey revision, which was lower, there were some housing numbers which came through. The point is data was soft, and that's the number, right? The US manufacturing PMI fell, and it was a surprise to 47 from 49. So that's a big drop, and that's the reason why you had a bit of a repricing in the rates market as well. Now, it kind of, again, brings into sharp focus that, well, is the US economy headed to a very orderly, soft landing kind of a situation? The only risk to this is if tomorrow, that is after market hours, our time, US market time, the Fed Chair Jerome Powell sounds hawkish. That's the only risk now, which could turn all of this around. Otherwise, it's a pretty decent place to be in at this point. The other big cue is that the leader, the Pied Piper for this entire big tech move, all of 2023, this AI-led move, which is Nvidia, that closed higher after another blowout quarter. Remember, the last quarter was an absolute beat. Stock rallied 40% after that. But, last night as well, Nvidia numbers have beaten and other AI stocks are following. Actually, if you look at the NASDAQ futures, there's a specific index for AI stocks. Those are rallying, and those are made up of large cap influence on U.S. indices overall. So that's that. Dollar index naturally came off a little bit. We're at about 103.35. Oil prices are well behaved. We are at about 82.87, which means that oil prices fell 1.5%. And that gets us to asking the question whether here also in India we will see a bit of an up move. And I think, yes, maybe that is what we will get. So the Nifty yesterday ended marginally above the upper end of the falling channel. We put out that level, which was 19,440. We left off at 19,444, just marginally above that. Today, on the way up, there are levels to watch. The first one is the 20-day moving average, which is about 100 points away. 19,529 is that level. That's the all-important resistance. Above that, the 61.8% retracement of the fall stands at 19,700. I don't think we get to that maybe in a day or two if things do pick up. But just 100 points away, there is a 20-day moving average, which is the marker between being in an uptrend and a downtrend. Recent low is 19,523. 19,253, which was the low last week, which should not be broken. Now, Bank Nifty decisively closed above 44,151, the level that we put out yesterday. Actually, banks is what excited many because after many days, the Nifty Bank had a full 1% move on the upside. That's been the laggard, and hopefully that will pick up as well. In the near term, there are two levels. The 40-day exponential moving average is 44,588. The 20-day comes in at 44,725. Those are the two immediate near-term resistances. And the major resistance from, in terms of the fall from the highs to the recent low is that number, which is 45,312. You'll be lucky if you get a soft kind of start, which gives you a perfect entry point, and then you can, sort of participate on the upside. That's going to be unlikely. The implied open will come up on your screen. I think it's already indicating a higher start. So maybe wait for perhaps, slight, the market to come off a little bit, slight small dips, etc. And I think that's the way to go. I've put out levels already, which perhaps come into play a little higher from what the implied open is at. Sonia.
Oh, absolutely. I mean, a big opening lined up, right? After a while. A big opening in the green. But I take your point. The real headline globally is what's happening with Nvidia, right? Yeah. Blowout numbers this time. We'll talk about it in greater detail. But it's what? $10 billion of revenues this time, which is a 170% increase year on year. Yeah. Because of the amount of the demand for AI chips. Yeah. And that just shows you that AI is not the future, it's actually the present. But we'll talk about that in greater detail. Before that, on the market itself, I think an uptrend has resumed. Perhaps it may be too soon to tell whether it will be intact or not. But definitely, the last couple of days, if you look at the market, map it from the August 18th low of 19,267, the Nifty is now up almost 200 odd points. So it has sort of picked up pace in the last 10 days or so. But now we are at the upper end of the trading range. It's important to see if this 19,500 level gets broken on the upside. But there are some cues to suggest that the flows have picked up. Both FIs and DIs bought in the cash markets yesterday. FIs bought 600 crores, DIs bought 120 crores. And global cues have also been very strong. As we just said, the NASDAQ is up for the third day in a row. It's not just Nvidia, but it's taken the entire sector up with it. In fact, NASDAQ was up 200 points overnight. The Dow was up almost 200 points as well. Now, Nvidia not only reported a blowout set of numbers this quarter, but the company expects their Q3 sales to triple, led by that insatiable AI demand. So that's pretty much the focus area for the markets. In our own markets, of course, a lot of stocks like Coforge, etc. will be in focus, as Bearings P is likely to sell its entire stake, but more on that later. But for now, I think the start will be well in the green. So the bulls are back.
Well, the bulls will be feeling good after yesterday's session, Sonia. But just one word on the institutional participation. The FI participation in the last 3 days has been relatively lower than what we have seen in the previous week. So that's come down a little bit just for the last 3 days or so. The Chandrayaan 3, well, it's been lucky for the bulls. And I say this because on the date of launch, well, we ended virtually at the high point of the day. We had a rather good session. And yesterday on the date of, accomplishing the mission as well, we were higher. So that's been a lucky point. Moving to the FI data, then yesterday, there was some mild short covering and they added long positions. But just take a look at the swing factor there. Shorts go down by 3,000 contracts, longs go down by 6,400 contracts. So that's a swing factor of close to around 10,000 contracts on. And that's why now you're seeing the short positions from around 61%. It's come down to around 55%. So some part of that short covering has taken place. And I always make this point that I like a net short market because that's what it does. It forces the bears to cover out some short positions and take it a little bit higher. The biggest positive, though, from yesterday's perspective is the FIs, the way they were writing puts. And they were writing both Nifty as well as Nifty Bank puts. Let's get to that then. On the Nifty, the 19,400 put, well, that was fairly active. It added closer on 70 lakh share dollar, premium around 30 rupees. So you just plug in that number. Since the 19,400 put is getting written, you deduct 30 rupees from there, and you'll get a bit of a support zone at around 19,370 for the day. The crucial support comes in at around 19,350, which is the 50 DMA. On the upside, though, once we cross the 20 DMA, then you'll say that we're in for a fresh breakout. Till then, you'll say, well, we're pretty much in this range. The Nifty Bank, we made this point 2 sessions ago that it's looking like it wants to make a big move. The move was on the upside. It was up close to around 500 points approximately, and there were signs of writing. So the 44,300 put, that was written yesterday. The premium ended at around 70 rupees. At the start of the session, it was close to around 300 rupees. So on an average, you're assuming that it could be 100, 150 rupees or thereabouts. The support is at around 44,200. Why is that? Because, in fact, on the way up, that was a bit of a resistance level. So that's going to be important. And today, we'll be starting off in all likelihood closer to around the crucial resistance zone of around 44,700, 44,800. And that's precisely where you have the 20 and the 50 DMA on the Nifty Bank. So how do you approach trade then, given that we're going to likely see a gap up? Well, if you have long positions, I think book some at the start. Maybe you could book half of those positions and carry the remaining. That could be a possible trade with a trailing stop loss out there, because the gap up is going to be bang in the resistance zone close to around the 20 DMA. So let's see how this one goes.
Okay, let's see how it goes. But we've been talking about the equities for a bit, equity markets. Let's get you some views on the money markets as well. We have a comment coming in from Parul Mithal Sinha of Standard Chartered, who says that the dollar INR slipped back below the key 83 to the dollar threshold as dollar stayed range bound despite the up move in the US rates, and with the USD CNH momentum ebbing on sharply lower fixings by the PBOC next week. She expects the dollar INR to trade in a range of 82.80 to 83.25. She says RBI intervention will help contain the volatility.
Okay, on bonds, we've got Parul saying that domestic yields consolidated last week after the recent up move tracking global rates. Even as liquidity deficit put pressure on short-term rates, she expects the 10-year benchmark bond yield to trade between 7.15 to 7.25%, with Jackson Hole on watch given its impact on global rates. She says oil prices and domestic food prices would stay key market drivers.
Well, we have a lot of stock-specific action to track for you. Get to that in just a bit. But for the time being, let's run you through the list. We're looking at Reliance Industries, Torrent Pharma, Atul Autos, Snowman Logistics, and Vascon Engineers. They are all the stocks that we're looking at on the back of positive news flow. And it's split down the middle because you have 5 stocks that could be reacting to negative news flow. They include Coforge, Sun Pharma, P&G Health, ONGC, as well as Oil India.